Natural gas in Europe is surging after Russia's Gazprom announced it was once again reducing gas flows through a key European pipeline. It plans to reduce deliveries through the Nord Stream 1 pipe to Germany today after doing so again yesterday. Gazprom claims the move is to service equipment, but Germany says the move appears to be political rather than technical. Joining us now, Halima Croft, RBC Capital Markets Managing Director and Global Head of Commodity Strategy and a CNBC contributor. Halima, good morning.
Good morning.
Obviously, just ratcheting up tensions, this situation for a while. You've been focused on the potential fracturing of this sort of alliance in support of Ukraine, mainly due to concerns about commodity prices. And how do you think this plays out from here when it does seem as if, the price of natural gas in Europe has just soared once again, and now you have the Swiss National Bank raising rates to try to corral inflation?
This is the ultimate energy blackmail card. Nord Stream 1 is now operating at 40% capacity. And this is coming on the eve of Chancellor Scholz and President Macron's visit to Kyiv to meet with Zelensky. There is a real concern right now that the Europeans are facing such serious economic pressure, that Russia has been successful in weaponizing commodity exports, that Europeans are basically becoming concerned that the cost of this war is too high, and they may be pushing Zelensky to make territorial concessions to try to bring this war to an end.
Which clearly is not a universally shared view of all the allies. And you have, the U.S., the U.K., some of the Eastern European nations clearly are more staunch and want to take a harder line. But then you have President Biden, of course, going to Saudi Arabia and trying to work that potential angle. Do you see any hope for an easing of the various supply bottlenecks here?
The problem that we're facing right now is that we have very little spare capacity. When we think about oil, there's very little left in the system. Probably in OPEC, there's 2 million barrels. So if Saudi Arabia were to essentially say, we'll give it all to you now, there's not going to be anything left to deal with any other supply disruptions. We're already having a situation in Libya where they're down 1 million barrels. The key thing, I think, to watch, and probably why the Europeans are getting very nervous, is their sanctions, their embargo on Russian seaborne imports does not kick in till January. So if this war continues to January, we're going to see another drop in Russian oil exports, further tightening the market. And that U.S. SPR release, that winds down in November. So if you're the Europeans and you're looking at getting more gas cutoffs, higher oil prices, on top of this whole issue of the refined product shortages, you're looking at a winter of discontent. So hence, I think they're getting nervous about this war.
There is a sense out there, and you see, on a country-by-country basis, saying that they're going to essentially take Russian oil. At whatever price it's out there. Yes. So there is this view, perhaps, that there really isn't a lack of supply coming out of Russia, or at least not as much as maybe is stated above board. So how much of that is actually feeding into global supply?
This is a really important question, because there was this whole self-sanctioning that happened when the war started, as European companies sort of pulled back saying, I can't touch this. But Russia was really able to place those barrels into India, into China, into Turkey. India particularly is the one to watch. They've massively ramped up their imports, but they're getting like a $35 discount. And they basically say the price is too good to pass up. What I think everyone needs to pay attention to is the Europeans have also passed sanctions, basically saying that their companies cannot ship Russian crude to a third country. They cannot provide insurance services for those cargoes. And Europe and the UK, they dominate the provision of ships and insurance for this trade. So the question is, will you start to see, Indian barrels basically say, Indian government saying, we can't take these barrels because of these other sanctions? So again, I think that's going to be an all-important question, is how serious are the shipping and insurance sanctions that will kick in at the start of the year as well?
Shepard Smith here. Thanks for watching CNBC on YouTube.